Welcome, thank you for joining us today. We are here to hear from Benchmark Holdings on their full year results. We will take questions at the end and we are recording this so you can find it on our website later on today. Without further ado, I will hand you over to Trond Williksen, CEO.
Thank you and good afternoon to all of you, and welcome to our financial year 20 year-end presentation. As said, I am Trond Williksen. I'm the CEO of Benchmark Holdings, and I'm joined with our CFO, Septima Maguire. And together we are going to give you an insight into the financial performance for our financial year ending September the 30th, as well as update you on status, strategy and outlook for the group going forward. Move to slide 2, please. Starting off with highlights. Truly, financial year 20 has been an exceptional year for Benchmark, a year of true transformation. The main theme has been to deliver on a highly needed restructuring, and we have done so. We have completed a very significant restructuring, transforming the company towards becoming streamlined, focused aquaculture biotechnology company with core activities within genetics, advanced nutrition and health. We have managed to execute on this despite partly difficult trading conditions and despite considerable challenges related to COVID. And we have emerged in a significantly stronger financial position. It follows from this, and you can see this on the slide, the numbers, that given these circumstances, we are satisfied with the financial performance in what has been a truly exceptional financial year 20. The financials reflect that we have been able to trade through a challenging year, being rather resilient. Key to the group's financial performance has been a strong operational and financial performance in genetics, who have been able to advance operationally and financially despite COVID, supported by a salmon industry that has remained rather robust throughout the year. The situation in advanced nutrition has been more challenging. The shrimp industry, which constitutes the main market for our high-quality advanced nutrition solution, has been significantly impacted by COVID and by underlying temporary disruption of supply-demand balance in different markets. In addition to these two factors, we have experienced similar imbalance in supply-demand of Artemia, which still is being our largest product group in advanced nutrition. So these factors have impacted the operational and financial performance of this business area in the financial year that we have left behind. Our health business area has had a year of considerable change, with the divestment of large part of its prior business activities that has been defined to be non-core going forward. What we are left with is a very focused business area, now concentrating only on aquaculture and more specifically on solutions addressing the main sustainability challenge of the salmon industry, the sea lice. Through the year, we have managed to make very good progress towards a commercial launch of BMK 08 and CleanTreat, which will be a transformational solution for the salmon industry, and it's still on track to be launched in Q2 in calendar year 21. If I'm looking forward, I see outlook as positive. We have a company well positioned in a very attractive industry with a lot of opportunities, and both the industry and the company are aligned with major ESG trends and opportunities. Move to slide 3, please. Our clear aim is to be a streamlined, profitable, market-leading aquaculture biotechnology company. And financial year 20 has really brought us forward towards this aim. We are ending financial year 20 in a much better position than we were when we entered into the year. Financially stronger, more streamlined, more focused, more commercial. With 3 clearly defined core business areas: genetics, advanced nutrition, and health. 3 complementary areas, all of them with very good value proposition to the challenges and opportunities of the aquaculture industry. All of them with established business activities, as well as initiatives that will enable us to grow in the years to come. As a group, we will remain focused, sticking to what is defined as being the core of Benchmark, making sure we realize the substantial potential we have in our hands, and as soon as possible becoming a sustainable, profitable, cash-generating company. Before I add even more flavor to this, I'll leave it up to our CFO, Septima Maguire, to take you through the details of our performance and financials for the year that we have left behind. So Septima, over to you.
Thank you, Trond. If we can start on slide number 5, please. Now, as Trond has noted, 2020 has been a significant year of transformation for Benchmark, where even amidst the difficult global environment, in terms of the structural efficiency programs, we have been able to deliver what we promised and then more. When we look at the adjusted EBITDA of 14.5 million for the continuing business, it becomes much clearer that even in such a challenging year, we have really good foundations to build this business into being profitable and cash generative in the future. Whilst we still see challenges in our markets, our business areas have adapted really well to working within the current crisis, and we continue to make progress on our strategic areas. Focusing on 2020, we ended the year with cash of £71.6 million and available liquidity of £83.2 million, driven in the main by the fundraising and also the proceeds from the divestments. Throughout the year, our focus was twofold. Firstly, to ensure that our continuing business retained clarity of purpose, and equally important, to ensure that we addressed the cost and cash burn areas in the business, to be able to invest in our commercial opportunities as we move forward. This resulted in the decision to divest most of our activities in vaccines, where the costs exceeded the future benefits. If we can move to slide number 6, where we're going to take a look at the overall business performance. Sales for the continuing business were impacted by the underperformance in nutrition, which is partially offset by stronger sales in genetics, and is very much reflective of the resilience of the end markets, with salmon being significantly less impacted by COVID-19 than shrimp. Our gross margin was further impacted by a reduction in Artemia pricing and the lack of critical mass from a sales perspective in nutrition in the year. Discretionary spend in operating cost and R&D were paused to mitigate the impact of COVID-19. We were not wholly successful, but these actions have contributed to building resilience in our continued business by reducing the costs year on year by £4.4 million and strengthening our balance sheet as we move forward into FY21. We can move on to slide number 7, where we focus on genetics. Genetics have had an excellent year, showing progress on all fronts, with growth at a revenue level of 5% at actual exchange rate and 14% at constant exchange rate. This was the business area which was most impacted by fluctuating exchange rates during the year, as the Icelandic krona and the Norwegian krona were quite volatile. In our salmon egg business, which is 2/3 of our revenues in genetics, we were able to utilise our facilities to their best advantage, with our biosecure facility in Iceland operating at high capacity, allowing us to fill a gap in the supply of salmon eggs into the Scottish market, as Norway lost its ISA-free status, restricting exports. This resulted in us supplying over 50 million eggs into the Scottish market in the year, in comparison to 24 million delivered in 2019. Our new Norwegian facility at Salten had its first full year of sales and successfully passed the break-even point. And as we move forward, our focus is on building on this progress to ensure that it's consistently earnings accretive in the coming years. Salton's ability to produce eggs year-round allows us also to have continuous sales throughout the year within this business area. In FY20, we had a non-cash fair value uplift from biological assets within the income statement of £3.3 million versus £2.7 million in 2019. What is this, I hear you ask? This fair value uplift is driven by accounting standards, and it represents expected profit from future sales of salmon eggs, recognised in the current period income statement. As we move forward, we will focus more closely on the metric adjusted EBITDA, excluding this fair value uplift, because we want to allow our investors a much clearer picture as to the profits on what we have sold in the period and more clearly help mirror the cash around those sales. Excluding that fair value uplift, adjusted EBITDA in genetics would be 11.1 million in 2020, up from 7.4 million in 2019, and the adjusted EBITDA margin of 27%, up from 19% in 2019. Still an excellent performance. Now, looking at our future growth opportunities in genetics. In FY20, given the struggling shrimp markets, we deferred the planned commercial launch of the SBR shrimp and instead used the time to focus on market trials. As this project is in development phase, the majority of the costs associated with it are being capitalised, with only 0.4 million in adjusted EBITDA loss and 1.6 million being capitalised. From the point of launch onwards, all costs associated with this facility will be expensed into our income statement. We continue to build our facility in Chile and invested 1.5 million of OPEX and 1.2 million of CAPEX in 2020. We expect to start selling eggs out of this facility from early in Q3 of financial year 21. Chile has been more affected by COVID than Europe, and it is more closely linked to US demand. But we are confident in the quality of our genetics, and the ramp up of the facility, as is normal, will take 3 years. It's also important to note that the eggs bought by customers in April 2021 will typically be harvested in the end of 2023, so hopefully COVID's over by then. Whilst genetics were not impacted to a significant degree around COVID in the year, as we look forward, we will continue to monitor the Norwegian salmon industry, as at present it is showing some short-term weakness due to the second round of lockdowns, but the impact is not significant at this point. If we can move on to slide number 8, please. Advanced nutrition's shrimp markets account for 71% of its sales, and the shrimp markets were the most heavily impacted by reduced demand in the year. This was further compounded by a demand-supply imbalance in Artemia after a couple of years of record Artemia harvests. As we enter the year, oversupply within the Artemia market and high inventory levels at distributors resulted in depressed demand. And this was further exacerbated by COVID as shrimp hatcheries, which represent our main customer segment, chose either not to stock their tanks or to do so at a lesser rate. To counter price competition in certain markets in Artemia, a strategic decision to reduce prices was taken in certain markets. The impact of this can be seen at the gross margin level, which reduced from 52% to 46% year on year. During the period also, a number of shrimp markets were either constrained by border restrictions or lockdowns, and the nutrition organisation focused their efforts on enhancing their online presence, establishing online training and educational seminars. The sea bass and sea bream market, which is primarily centred around Europe, remained relatively more resilient, with a higher level of stocking occurring. But we still experienced a drop in demand within this market by 8%. This resulted in adjusted EBITDA falling by £9.6 million, which is 60%, to £6.4 million in the year. Moving on to health, which is slide number 9. Health was an area of focused restructuring during the year, with the vaccines development and the toll manufacturing being reviewed and either discontinued or divested. This resulted in the continued business having two main focal points: the sale of Salmasan, our existing sea lice treatment, and the launch of the new sea lice treatment, BMK 08, in conjunction with Clean Treat. Salmasan delivered £1.2 million of gross margin contribution as sales fell after a year of high sea lice levels in 2019 in Canada, and also increased generic competition in Chile. The OPEX and R&D activities relate in the main to the regulatory team, who have been working diligently in the year to progress the marketing authorization for BMK 08, and also our Clean Treat team, who've been working to be launch ready for when we have a marketing authorization in place. In addition to these teams, we also have the infrastructure departments, such as supply chain and finance people, etc. Moving on to slide number 10. As part of the cost review of our continuing business this year, we crystallised annual cost savings of £1.5 million through restructuring our senior management team. This is in addition to the pause on discretionary spend which we undertook when COVID started. The pause on discretionary spend was well supported by all of our business areas, as can be seen here within operating expenses, down by 4.4 million, and R&D down by 2.2 million in the continuing business. As we move forward, it's important to consider that these savings were the result of a hard stop on discretionary spend in areas such as travel, marketing, etc. And whilst we remain prudent in releasing these holds, we anticipate that as we move back into normal trading conditions, we will also gradually release some of the hard stop on certain areas, whilst maintaining a high degree of control over costs. The R&D spend that we're seeing within the continuing business is focused on commercial aims, such as expanding the number of traits in genetics to broaden the customer offering, obtaining the marketing authorization for BMK 08, and in nutrition, expanding our offering of high margin specialist products to customers to strengthen our market leading place in hatchery and advance our market share in nursery and grow out. Now, if we can move to slide number 11, to focus on what is the most important slide of the deck, cash and debt. Net debt in the year has improved considerably from 87.1 million to 37.6 million. And the net debt position at the 30th of September also includes the impact of £9.6 million related to IFRS 16, where leases formerly shown as operating leases are now treated as finance leases. The two drivers of this significant shift in cash were the equity raise in February, which raised net proceeds of £41.7 million, and the proceeds received to date for the divested assets of £38.5 million. Some additional contingent consideration exists relating to these divestments, which may be received in the next few years. Cash used in operations was a negative of 7.2 million, offset in part by positive working capital movements, driven by lower activity levels in the year. We would expect a reversal of these figures once the market moves back towards positive growth. Interest paid in the year was 7 million, with cash tax at a much lower number than normal due to the lower level of profits in the nutrition business. Capital expenditure was lower than normal run rate as we tightened cash control and focused on our strategic projects, BMK 08, Clean Treat, the ramp up of Chile, our SPR shrimp, and our Artemia replacement product. At the 23rd of November 2020, we have cash of £65 million and available liquidity of 76 within the group. Cash preservation remains a key driver in the business, but we're also considered to the fact that we need to selectively invest in our business to progress it towards standing commercially on its own 2 feet. Back to you, Trond.
Thank you, Septima. Let's move into strategy and outlook. As I ended my first part of this presentation, I think it's important to understand that Benchmark is in a unique position. a position to deliver and contribute to one of the main ESG opportunities of our time, sustainable food production. We are in a very attractive market. Aquaculture is an inherently sustainable industry with a lower environmental impact than other animal protein productions. And it is growing faster than any other animal production. The industry is very young, and even if it has embedded main features to be sustainable, the industry needs products and solutions to improve productivity and to support sustainable growth. It is here Benchmark comes in, very well positioned, with unique complementary offering, market-leading position, a focused strategy, and an experienced, highly skilled team to support and contribute to the further development of this industry. Now, having completed an extensive restructuring, we are also in a position to support and selectively invest in our core business areas, making sure that we as a company utilize the opportunity, delivering growth and sustainable profitability, making Benchmark an attractive investment. Move to page 14. Close to a year ago, we issued a roadmap to growth and profitability. This is still the roadmap we follow. We have made significant advancements in the year that we have left behind, but significant steps are also ahead of us in the financial year that we just entered into. Yes, restructuring is complete, but we still work on further streamlining of the company as one group, building an agile and strong commercially oriented company. There are potentials to be taken out, making sure we turn all stones necessary to make the group as efficient as we aim to be. We are lucky to have a pipeline of products that we need to deliver on that will generate further growth and development. The top strategic priority for the group is BMK08 and CleanTreat to make sure we bring the potential of this to life. We intend to grow in established market and have significant possibilities to follow up on in order to do so. We have large opportunities for organic growth and expansion in our genetics business area through further ramp up of the Salten facilities, primarily targeting growth in the large Norwegian salmon market, where we have strengthened our position over the last year. Further expansion of our capability on Iceland is also in the pipeline, enabling us to take a larger share of the European salmon production market, as well as position towards the upcoming land-based salmon industry. In this new segment, we have a unique market position due to the quality of our genetics inherently optimized for land-based production environments. In a similar way, we also have large opportunities to grow in established markets, building on our strong position within advanced nutrition. Our strategy is here to keep focused, to keep seeking improvements in solutions and the way we work, enabling growth in specialist high margin segments. Further, we intend to selectively invest in areas to leverage group capabilities. Financial year 21 will be the year where we commercially launch SPR shrimp, underpinned by investments to gradually increase commercial capabilities as we develop markets in the years to come. Financial year 21 will also be the year where we expand our capabilities within salmon genetics, entering into a commercial launch in Chile. This will enable us to expand into the second largest production region of salmon, where we previously have had no commercial footprint for our salmon genetics. Finally, we will seek to look beyond what we have in our pipeline today, to seek to position Benchmark for even further future growth. I've been clear on this before, but I repeat it. We will be disciplined in how to enter into this. We already have in our hands a lot of initiatives that we can grow and develop, and we will make sure that we take out in the potentials of this first. This will be first based. Beyond this, there will be new opportunities for the group that will enable further growth. We will seek this as we move forward, but be disciplined, looking for opportunities in areas that naturally falls within what is and what will be our core business areas. We will not, again, be tempted to go beyond and wide and deep, again, losing focus. Move to slide 15, please. To even give a little bit more granularity on the main initiatives that will be the key strategic priorities for the group in financial year 21. BMK 08 clean trade, as I said, it's the highest strategic priority of the group. Our aim remains to launch commercially in Q2 calendar year 21, and we remain on track to do so. Next milestones are the MRL ratification in the EU, and then in Norway, and then getting the marketing authorization in Norway. In the subsequent entering of the market, we will also here apply discipline. Focus for now will be in Norway, the largest production region in the world. We will start out with 2 clean trade systems, ramping up the investments with further systems, but doing so in line with the market uptake of the solution. SPR shrimp represents another strategic priority for us in financial year 21. After years developing world-class genetic strains with traits that will represent a real value proposition to the shrimp industry, we are now entering into the commercial launch phase. Tests in the market were done last year, confirming the potential. Demand is there, we know that, and we will gradually increase our capabilities to serve the market, starting off with increasing our capacity to supply 100,000 breeders from our US facility, Fellsmere. Our strategic priority in financial year 21 for advanced nutrition is to regain Artemia market share, grow our position in hatchery and nursery, as well as further develop our position as leading in health and environmental products. Everything we do will be within specialist high margin segments where we have a very strong position to build on. Coming out of a year where COVID and market turmoil has reduced our performance, our focus will be to gain back and further develop our positions. And we believe we are in a place where we are able to do so. Finally, the strategic priority for salmon genetics in financial year 21 will be to continue to develop the increasingly strong position we have in these markets. The continued ramp up of the Salten facility is a key focus for us, enabling us to take out the potential in the investment. The financial impact of this will show as the cost structure is rather fixed, meaning that increased utilization is a key to profitability of that investment. The products from Salten is superior and it's very well received in the market. So we have a market uptake that will enable us to climb the ladder in the utilization of the facility during financial year 21. In a similar way, we are increasing our peak capacities in Iceland to meet further demand in the rest of Europe and to meet future demand in the land-based salmon segment that we expect will grow in the years to come. Where we are now in Iceland, we are about to reach our capacity, and we will make sure that we expand this, enabling us to deliver high quality genetics as demand is increasing. We can move into outlooks, page 16, please. A few words on the outlooks. It follows from what I've said so far, and also what Septima has said, that our focus very much remains to reach sustainable profitability and positive cash generation. it's important for us. We have a positive start of financial year 21. And we have a very strong focus on delivering operationally as well as financially to the best of our ability in the year that we have just entered into. Having said that, market conditions is still the same as it has been in the latter part of financial year 20. We expect that the salmon genetics part of our business will continue to be quite resilient to the short-term volatility in the salmon market that we currently see. And the outlook for the salmon industry is quite strong looking into financial year 21 and beyond, and we expect this to continue to be reflected in the demand that we see for our genetics in the industry throughout the year. The shrimp market continues to be impacted by COVID, and the visibility on when this will change is still low. We don't have a date for that. Consequently, we are prepared and expect that this will continue to impact our advanced nutrition business for some time. Focus will be to deliver to the best of our ability, seeking improvements in solutions, as well as the way we work, positioning to take out the fair share of the market as it is now, and then gain position when the market conditions returns back to more normality. And they eventually will return back to more normal conditions. As this reflects, the performance in our established businesses will be driven by underlying market conditions. What comes in as a new vector is the planned launch of BMK 08 clean treat that we expect to have a positive impact on our performance, but in the late part of financial year 21. Focus is very much in the next year, making sure we continue to realize the potentials of our initiatives, our strategic priorities, and focused investments. And doing so, we will always be mindful and committed to maintain a solid balance sheet, making sure investments in initiatives always is paced to cash generation. On a final note, we think we are ending financial year 20 in a unique position. We are in an industry with positive fundamentals, coupled with the leading position of benchmark, and where we are now after the restructuring, this will drive attractive growth in the years to come. And in my mind, we are only at the starting point for a very, very good journey. So with these words, I would like to thank you for the attention and open up for questions.
Thank you, Trond and Septima. Just a reminder to everyone that they can submit questions via the question button at the bottom there. And we now have our first one in. How many tons of salmon could be treated in 22-23 by BMK 08 and clean treat under a normal and good scenario?
Well, as I said, our thinking around the introduction to the market is that we are very much starting in a very structural way, saying that we are starting off with 2 systems, and then we develop our entry into the market with new investment to ramp up the capacities. As we see that we have a capacity utilization that defends that, to make sure that we have profitability in the way that we are entering into the market. That is the thinking around it. The theoretical capacity of the systems, we could give, we could theorize a lot about that. It is a significant capacity of the systems. Again, our focus now is to get out in the market on the right foot, making sure that we have capacity utilization that is sufficient to make sure that we are driving this investment into the market in a profitable way. So I think I will leave that. I think I will leave it to that.
Good idea not to make forecasts at this point. Right, we've had another one in on email. We're all hoping for more normalized economies soon, but do you already see any correlation in your end markets with the more advanced economic recovery in Asia and some sectors in the US?
I think we see some. I think we see some signs in Asia, but again, as I said, I've been following this now since June, and it, when things are picking up one place, and going down another place, if you look a month after, you have it's quite a volatile situation. So if it really is a sign of a sustainable recovery, we don't know yet. And that's why we are so diligent in saying that visibility is still low. We don't know. We don't have a date before this is returning to normality. That's why we are so much focusing on making sure that we get the best out of the situation we have now, that we can trade through the situation we have now, making sure that we use the time efficiently in improving our solutions, the way we're working, making sure that we are taking out the potential in the market as it is now, and then positioning to take out even bigger potentials when the market comes back to normal. And it will come back to normal. I think it also will develop beyond that and give us much more opportunities when we are moving down the road, but then we are not talking tomorrow, then we are talking in the future years.
Thank you, Trond. Another one here. How much further investment is expected in Clean Treat as it is rolled out in 21?
Septima, I think you can probably be the one that answers that.
So there are kind of two sort of buckets of investment. There's the capital investment to actually build Clean Treat units, and each Clean Treat unit that we build costs us between £2.5 and £3 million. And as we've previously said, we aim to have 2 units at launch, and we've already invested some money in that, but we've still got a way to go in terms of the next financial year around that. And then we can we would then plan to also then continue to add Clean Treat units, as Trond referenced, as customer demand drives good capacity utilization of those units. Then there's an OPEX investment, whereby as we're moving towards the launch, we will also invest in costs to put people on boats, train people to use our machines, make sure that we've got the right chemists on the boats to do the testing of the water, to make sure that the Clean Treat water, when it's released back into the ocean, has all of the medicines and all of the organic matter removed. So there's that aspect of an investment. So animal health, the main focus of that that part of the organization in the next financial year will be moving towards that ramp up investment. And as you can see from this year, they had a net adjusted EBITDA loss of 3.7 million within this financial year, and that was on the back of 1.2 million of gross margin. So their operating cost base is all centered around those ramp up costs, those people to get us to that launch point. But that's all part of our operating cash flow plans for the next 12-24 months to try and crystallize the profit that we can take out of BMK08, more importantly the cash that it can generate for us as a business moving forwards.
Okay, thank you, Septima. Another one here. You seem to hint that there is potential appetite for M&A. So if so, what level of M&A might we see and where?
Yeah, I think that's a question that goes to me, and that's what I'm hinting at, what I'm making very clear is that yes, there might be possibilities for M&As and opportunities going down the road, the way that a company grows is a combination of organic growth and M&A. And there will always be a combination long term on that. What is extremely important for us now, we have passed one stage now where we have made a good foundation for the group. We know there is a lot of initiatives in the core business areas that we have established now. And our first step or first base will be to take out the potentials in those. And then when we have done that, we will seek new opportunities. They will be within the core business areas. We will not go wide and deep and broad and lose focus again. We will keep focus. This management is all about that. So yes, there will be M&A opportunities. It's not our focus now. No, we have focus on the near-term initiatives, and we have our hands full to take out potentials of those. And then down the road, those opportunities could be exciting new opportunities that adds to the dimension of Benchmark in the future.
Perhaps then leading on from that, and a little more ephemeral, but you've been very consistent in your messaging through your disposals on looking after the existing employees and trying to make sure they were rehoused within good organisations. So could you just update us a little bit on the internal mood within Benchmark and the view, for the business going forward?
Yeah, I can start with that, and Septima could fill me in on that. I think the internal mood is good. I am quite proud, I must say, of the way that we have put employees in the center of our attention during COVID, making sure that we have policies in place in order to take care of our employees. It's important. And we continue to do so. And I'm also very proud, and I don't take the honor for this because it was a little bit pre me coming in, the way that the disposals or the divestments was done. We had as a mantra coming into those processes that we were going to keep jobs to the extent possible. And we've been very successful in finding new homes for the bits and pieces of Benchmark that is not more the core going forward. And we've been very successful in doing that. And that mantra has been important for us. And I think we have lived it to the extent that I'm quite proud of that. The current situation, I think its mode is good. Like in any other company, I think having imposed on us the restrictions that COVID imposes on us, it takes its toll. But I've been impressed. I've been so impressed by the way this organization has been operating through this. That you're really impressed by that. But let's hope now that we are at some point in time getting out of this. And I hear about, even in Norway, I hear about some vaccines now that eventually brings us out of our homes and get us back to more normality again, because the people in Benchmark, they really deserve it, and the rest of the people of the world really deserve that.
I think if I may add, we kind of have an approach where if we have happy employees, we will have happy customers and we have happy shareholders. Because it all filters from, if a person wants to go to work on a Monday morning, they will do their best with the customers, and then that creates its own value chain from a shareholder point of view. But from Trond's point, working in this very, very hybrid world is interesting. Trond and I have met in person once, and yet we've worked together. We met, I think, originally back February, March time, when he was talking about joining Benchmark, and yet we talk to each other so many times during the day. We collaborate so much in our vision for Benchmark. So I think that as we move through it, all of our employees see that what's the possibilities that we can see, and our belief, our fundamental belief in being able to crystallize all those possibilities for all of our employees all of our customers and all of our shareholders.
ESG, a much bandied around phrase, but it's good to see you living and breathing it. Perhaps this is a little bit more just starting at the bottom here from this investor, but he's asking, why has there been a drop in demand for products related to food production? Because I don't imagine we've all been going on a diet for the last 6 months.
Yeah, it's a really good question. It's a really good question. What we see, what we have seen, you know, a lot of the consumption, especially with, you know, the shrimp and the salmon is the important species for us. You know, it's a lot of the consumption of both those species have been in hotels and restaurants, HoReCa. So when restaurants are closing down, it means disruption of the supply chain, you know, of the normal consumption of those goods. Yes, then you see a shift towards from HoReCa towards retail, and you've seen that. So we've been growing in retail, but while doing that, you know, the whole demand is impacted and disrupted. So it's more like disruption. A part of this is disruption rather than that we are a change of the way we are consuming. That impacts the value chain up to them, rather than that we are eating less. I don't think either that we are really eating less, you know, during these times. So that is a disruption, and when that disruption hits in, you know, that has an impact. It creates uncertainty, creates less demand. It should be mentioned that, you know, we have pointed out that where we see the most impact is within shrimp. Salmon is less impacted of this disruption, and I think that has to do with the fact that shrimp is to an even bigger extent having been consumed in HoReCa than salmon, and they have different length of the production cycle, you know, from shrimp going into hatcheries till it's ready to eat. It's just a short period, so we get very short reaction, while salmon is like that's for Norwegians. It goes a long time before things happen, you know. It takes years, you know. So the supply chain is less impacted of it, especially on the genetics that we see it, than you will see in shrimp. So that was an attempt to answer that. It's a good and fundamental question.
Good. Well, I think that's it. All we have on the questions now, so we can all go off and have our lunch in the UK. Thank you very much for listening, and we look forward to speaking with you again in 6 months' time, Trond and Septima. Thank you.
Look forward to that.
Thank you.
See you next time.